Most people think buying property in Minnesota is a safe bet. But right now, that assumption could cost you a fortune. Hello, my name is Greg, and you're welcome back to the Globe Realty. In today's video, 10 worst Minnesota cities to buy property right now. Don't buy here in 2026. We're pulling back the curtain on parts of the Minnesota housing market that look fine on the surface, but show serious warning signs once you dig into the data. This isn't speculation. It's based on crime statistics, price performance, housing demand, population movement, and risk-to-reward analysis. The same indicators professional investors use before putting real money on the line. In this countdown, you'll see why some cities are losing buyer confidence, why price growth is stalling in places people still rush into, and how rising costs and shrinking demand are quietly reshaping Minnesota real estate in 2026. If you're moving to Minnesota, planning to buy your first home, or looking at property investment, this video could save you from making a decision you'll regret for years. Watch all the way to the end. The final entries reveal the biggest red flags most buyers never see until it's too late. Like the video, subscribe to the Globe Realty, and let's protect your money with facts, not hype. Number 10. Duluth, St. Louis County. We kick off with a city that looks like a dream on postcards, but starts to unravel once you run the numbers. Duluth. At first glance, Duluth sells a powerful story. Lake Superior views, tourism buzz, historic neighborhoods, waterfront condos. But here's the uncomfortable question most buyers don't ask soon enough. Does lifestyle demand actually translate into long-term property value growth? In Duluth's case, the data says, not really. Duluth consistently ranks high in property crime per capita compared to many Minnesota cities. Theft, vehicle break-ins, and burglary rates sit well above what most buyers expect from a scenic lakefront city. And property crime matters more than people think. It directly impacts insurance costs, rental desirability, and resale appeal. Would you feel confident buying a long-term asset in a market where crime risk quietly chips away at returns? Now look at population trends. Duluth's population has stabilized, which sounds positive until you compare it to the rest of Minnesota. While metro and suburban areas are seeing net growth, Duluth remains largely flat, following decades of decline. Flat population means flat demand, and flat demand puts a hard ceiling on price appreciation. Real estate grows when people compete for housing, not when the buyer pool stays the same year after year. What about prices? Yes, home values have risen, largely driven by tourism appeal, short-term rental interest, and lifestyle buyers chasing waterfront views. But here's the catch. Price growth hasn't been matched by strong income growth, job expansion, or population inflows. That's not organic appreciation, that's pressure-driven pricing. And pressure-driven markets are the first to cool when conditions tighten. Ask yourself this. If tourism slows, regulations change, or short-term rentals get restricted, who's left to support these prices? That's why Duluth lands at number 10. It's not collapsing, but it's mispriced for the fundamentals. The waterfront attracts niche buyers, but niche demand doesn't sustain broad, long-term investment performance. Add higher property crime, limited migration, and modest economic expansion, and the risk-to-reward equation starts to look unbalanced. Duluth isn't a terrible place to live, but in 2026, it's a questionable place to park your money. Number 9. Brooklyn Center, Hennepin County. A city that often gets pitched as a budget-friendly alternative to the Twin Cities, but that label hides some uncomfortable realities. Brooklyn Center. Let's start with the issue most buyers try to downplay until it shows up in their insurance quote or resale value. Crime. Brooklyn Center is consistently listed among Minnesota cities with elevated total crime rates, particularly when adjusted per capita. Property crimes like theft, vehicle break-ins, and vandalism remain persistent problems. And here's the part buyers don't like to hear. Crime doesn't just affect safety. It directly suppresses buyer demand, raises insurance premiums, and limits who's willing to move in later when you want to sell. Now, some people will say, but it's affordable. And that's true. On paper. Home prices in Brooklyn Center often come in lower than nearby suburbs. But ask yourself this, is it a bargain, or is the market discounting risk? In real estate, lower prices are rarely a gift, they're usually a signal. Let's talk population trends. While high-growth suburbs around Minneapolis continue to attract families, professionals, and long-term homeowners, Brooklyn Center has seen slower net migration. Demand isn't accelerating, it's treading water. And when population growth lags, appreciation usually follows. No surge in new residents means fewer competing buyers, weaker bidding pressure, and softer long-term price gains. Here's where it gets controversial. Brooklyn Center sits close to jobs, highways, and the metro core, yet it still struggles to convert that proximity into sustained housing momentum. That tells you something. Location alone isn't enough anymore. Buyers in 2026 are prioritizing perceived safety, school quality, and long-term neighborhood stability, and Brooklyn Center continues to face perception challenges on all three fronts. Another risk? Exit liquidity. When markets tighten, the first cities to stall are the ones buyers already feel unsure about. If the broader Minnesota market cools, Brooklyn Center could see longer days on market and sharper price resistance compared to stronger performing suburbs. So yes, Brooklyn Center can look tempting if you're chasing affordability, but affordability without growth is a trap. Elevated crime plus slow population momentum creates a fragile investment equation. That's why Brooklyn Center lands at number 9. Not because it's unlivable, but because in 2026, the risk-to-reward math simply doesn't favor buyers. Number 8. St. Cloud, Stearns County. St. Cloud often gets framed as a safe middle ground in Minnesota real estate, a regional hub with a university presence, medical facilities, and steady local demand. But when you move past the surface narrative and look at the data, the cracks become hard to ignore. Start with price performance. While Minnesota as a whole has seen modest but steady appreciation in recent years, St. Cloud's home price growth has lagged the state average. Appreciation has been uneven and, in some periods, barely outpacing inflation. That's a red flag for buyers banking on equity growth. Ask yourself this: if you're tying up capital for years, shouldn't the upside be clearer than maybe it keeps up? Then there's crime, a topic locals often downplay, but investors can't afford to ignore. St. Cloud frequently appears within the top tier of Minnesota's cities for total crime, especially when measured per capita. Property crime and violent incidents alike affect more than safety. They influence insurance premiums, rental demand, and resale psychology. Buyers may tour a house once, but perception sticks long after the closing. What makes this more controversial is St. Cloud's role as a regional anchor. In theory, that should fuel strong housing demand. In reality, it hasn't translated into robust economic expansion or population acceleration. Job growth has been modest, and wages haven't surged enough to justify aggressive home price gains. That creates a pressure point in the rent versus buy equation. Rents often don't rise fast enough to support high purchase prices, squeezing cash flow for investors and affordability for owner-occupants. And here's the uncomfortable question most buyers skip: who is the next wave of demand? Migration into St. Cloud has been steady but not explosive, especially compared to fast-growing suburbs closer to the Twin Cities. Without a strong influx of higher-income households, demand stays shallow, and shallow demand means softer markets when conditions tighten. St. Cloud isn't failing, but it's underperforming relative to expectations, and that's often more dangerous than outright decline. A city that promises growth but delivers stagnation leaves buyers stuck, waiting years for appreciation that never fully materializes. That's why St. Cloud earns its spot on this list. Not because it's unlivable, but because in 2026 the numbers suggest risk is rising faster than reward. And as you'll see next, other cities on this countdown push that imbalance even further. Number 7. Fridley, Anoka County. When you hear Fridley, a common reaction is, it's just another Minneapolis suburb. But scratch the surface and you'll find a market full of contradictions that make buyers think twice in 2026. Let's talk safety first, because this isn't fear-mongering, it's data. Fridley has a higher-than-average crime rate relative to its population, especially in property theft and robbery categories. That's not a minor footnote. It's a factor that directly affects homeowner confidence, insurance costs, and long-term desirability. Ask yourself, would you pay a premium for a home in an area where break-ins or theft are statistically more common than in neighboring suburbs? A lot of buyers say location, 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 but when the statistics start trending in the wrong direction, that mantra rings hollow. Now let's shift to the housing stock. Fridley is a first-ring suburb, meaning much of the housing was built decades ago. Older homes can be charming, sure, but they also require more upkeep, often lack modern layouts, and in many sections, the curb appeal and neighborhood quality vary dramatically from block to block. For investors and first-time buyers alike, that inconsistency translates into uncertainty on resale value. You could buy two homes on the same street and see completely different buyer interest 3 years later. Here's where the narrative gets even more interesting. Despite those safety and housing mix issues, demand for cheaper homes in Fridley is surprisingly competitive. On paper, rock-bottom pricing should be a boon. But what's really happening is buyers are betting on affordability over fundamentals. That means a bidding frenzy for cheap homes that actually masks hidden risk. Stagnating values, slower appreciation, and a buyer pool that's more price-sensitive than growth-oriented. And don't overlook this. Suburbs with similar proximity to Minneapolis, but better safety records and more consistent housing stock, are seeing stronger long-term demand. That puts Fridley in a tougher spot, competing with itself for the only advantage it has left: affordability. But affordability isn't an investment thesis when prices aren't rising. So why does Fridley show up on this list? Because the data tells a story many real estate videos gloss over. Cheap isn't the same as smart. In 2026, that distinction could cost you. Number 6, Bloomington, Hennepin County. When people hear Bloomington, their first thought is often Mall of America. Convenient retail, easy airport access, and a major suburb just outside the Twin Cities. But convenience alone isn't a real estate investment strategy. And in 2026, the data shows Bloomington's housing market isn't as bulletproof as its location suggests. Let's start with the hard numbers on crime, because this matters more for property values than most buyers realize. According to the latest FBI UCR data, Bloomington's property crime rate sits near the top of Minnesota cities, with about 3,479 property crimes per 100,000 residents, ranking it high among peer cities and substantially above many safer suburbs. Even violent crime, while not catastrophically high, is elevated compared to state averages. So ask yourself, is proximity to the airport worth paying a premium if buyers and renters start factoring safety into their decisions? Here's the twist. Bloomington does have real demand drivers. Easy commuting via I-494 and I-35 Butte, strong retail and jobs tied to tourism and services, and a variety of housing stock make it attractive on paper. But that amenity-based demand isn't translating into consistent price growth. Recent market reports show home prices in Bloomington are struggling, with median sale prices slipping year over year, even as metro areas continue upward trends. Why does that matter? Because strong fundamentals, jobs, wage growth, population inflows, usually fuel appreciation. But in Bloomington, the convenience factor has been propping up interest, not replacing the need for strong economic drivers. That means when buyers weigh safety, schools, and long-term investment potential, Bloomington's appeal starts to fade compared with suburbs that offer similar transit access and better quality of life metrics. And here's where controversy enters the conversation. Many people insist Bloomington is safe enough because violent crime is lower than in urban cores. But property crime, the stuff that drives up insurance costs, deters renters, and leaves lasting perceptions, is significantly above state and national averages. That's not a small data point. That's a red flag for investors banking on rentability and resale value. So yes, Bloomington has amenities, but access to the airport and big retail doesn't automatically mean strong real estate returns. For buyers in 2026, convenience alone isn't enough when the market starts pricing in long-term risk. If you are finding value so far in this video, make sure to hit that like, subscribe to the Globe Realty, and turn on the bell. It will help others to discover the truth about the ever-dynamic American real estate. And now, the top 5 on this countdown. Number 5, West St. Paul, Dakota County. West St. Paul has that classic suburban appeal: tree-lined streets, modest homes, and proximity to the Twin Cities. At first glance, it feels like a hidden gem: affordable housing, short commutes, and all the perks of metro access without the Minneapolis or St. Paul price tag. But if you dig into the numbers, the story becomes much murkier. Let's start with crime. Despite being a mid-sized suburb, West St. Paul registers a high total crime rate relative to similar cities. Property crime, theft, and occasional violent incidents aren't just statistics. They influence everything from insurance premiums to buyer perception. Ask yourself, would you feel confident investing in a home if residents across your neighborhood were regularly reporting thefts or break-ins? Many buyers overlook this because they focus on affordability, but crime directly impacts long-term resale value and rental demand. Now, consider economic fundamentals. West St. Paul benefits from proximity to Minneapolis and St. Paul, but here's the catch. It lacks a strong, independent job base. Most residents commute outward, which means local economic growth is slower, and your potential long-term earnings or rent stability may be more fragile than in suburbs with their own thriving business centers. Essentially, the town relies on jobs that aren't even within its borders, and that creates a fragile demand dynamic for housing. Here's where it gets even more controversial. The city's perceived affordability can be misleading. Lower price tags are tempting, but affordability alone doesn't make a property a good investment. Lifestyle trade-offs, longer commutes, limited local amenities, and higher crime risk are quietly baked into the price. It's the classic trap: cheap now, but paying later in stress, repairs, or stagnant equity. Even when inventory is tight, buyers in West St. Paul often face a dilemma. Do you chase the perceived deal, or do you wait for a suburb with better fundamentals, stronger safety records, and healthier demand trends? Data suggests that in 2026, this is not a market where the numbers favor risk-takers over cautious investors. So, while West St. Paul looks affordable and convenient, the reality of high crime, weaker economic drivers, and lifestyle trade-offs makes this city a riskier bet than many first-time buyers realize. In a market like Minnesota today, cheap isn't always smart, and West St. Paul is a perfect example of that harsh truth. Number 4. Bemidji, Beltrami County. If you're picturing Bemidji as a quiet lake town with steady real estate gains, the reality on the ground in 2026 is far more complicated, and for serious buyers, it raises red flags you can't ignore. Let's start with the crime data. Bemidji has consistently ranked near the top of Minnesota cities for property crime per capita, with roughly 4,604 property crimes per 100,000 residents reported in 2024. That's significantly higher than many other Minnesota markets. And when you dig deeper, larceny theft accounted for the vast majority of those incidents. Even violent crime, while not soaring, is above state and national averages. Here's a provocative question for potential investors. Would you rather buy in a place where theft and break-ins are commonplace, or a neighborhood where crime is well below average? Crime doesn't just affect safety, it affects your insurance costs, rental appeal, and buyer confidence down the road. Now let's talk market dynamics. Bemidji is a smaller market, and that size cuts both ways. On one hand, it can feel affordable. On the other, small markets are volatile. Prices can stagnate for years or swing unpredictably based on factors like local employment shifts or changes in tourism dollars. Recent real estate data shows the median home price is around the low to mid $200,000, but year-over-year appreciation has been weak or even flat depending on the data source. This isn't the kind of predictable, slow, and steady growth investors crave. And while Bemidji does have outdoor lifestyle appeal, lakes, trails, and nature everywhere, lifestyle is not the same as economic momentum. The local economy doesn't boast a wide range of high-growth industries, and population growth remains modest, not explosive like we see in other parts of Minnesota. That means the buyer pool you're competing with today might not expand tomorrow. So yes, Bemidji may feel scenic and charming, but charm doesn't pay the mortgage or guarantee strong investment returns. In fact, when you weigh crime risk against stagnant price trends and limited economic growth, the market's upside becomes questionable at best. If you were hoping Bemidji was a hidden gem, think again. This is one of those markets where lifestyle appeal masks weak fundamentals, and in 2026, that's a dangerous combination for buyers and investors alike. Number 3. Roseville, Ramsey County. Roseville is one of those suburbs that looks great in a brochure. Shopping hubs, transit access, parks, and a central location just outside the Twin Cities. But once you start digging into the actual numbers, it becomes clear why this market raises some serious red flags for buyers in 2026 and why it finds its way onto this list. Let's talk crime, because this isn't just anecdotal, this is data. Roseville consistently leads the entire state in property crime per 100,000 residents. Yes, higher than Minneapolis, St. Paul, and all other cities with comparable population sizes. The latest FBI crime stats show this pattern is not a one-off blip, but a persistent trend. And when a city tops the charts for property crime, that affects perception, insurability, and long-term demand. Think about it. Would you pay top dollar for a home if prospective renters or buyers are seeing headlines about theft and break-ins every few months? Crime doesn't just hurt feelings, it hurts property values. Now, Roseville does have real economic activity. There's major retail draw, especially with regional shopping destinations that pull traffic from all around. Transit infrastructure is strong, and it's easy to get around. But here's the catch: activity doesn't always equal appreciation. The very conveniences that bring people into Roseville during the day, retailers, commuters, shoppers, aren't necessarily the same factors that sustain long-term housing demand. In fact, many buyers are skipping over Roseville because they're opting for suburbs with similar access but stronger safety profiles and more robust price growth. And here's where the market dynamics get controversial. Roseville's housing inventory is relatively tight. That normally would put upward pressure on prices. But because the crime perception is so strong, it suppresses buyer interest, especially among first-time buyers and families who might otherwise be priced out of more expensive suburbs. That's a double whammy: limited inventory and limited appetite. Ask yourself this: would you rather have a well-located property that sits on the market longer and sells for less, or a property in a safer area that attracts competitive offers? In 2026, the data increasingly favors the latter. Roseville can be a place to live, but as an investment in today's Minnesota market, crime statistics are driving buyer psychology more than retail corridors ever will. And that's exactly why this city shows up here. Number 2, St. Paul, Ramsey County. When most people think of St. Paul, they picture charming historic districts, classic architecture, and the peaceful twin to Minneapolis. But if you're considering buying property here in 2026, it's worth asking a tough question. How much of St. Paul's appeal is real value? And how much is just perception? Let's get straight to the hard numbers. According to the latest FBI Unified Crime Report data, St. Paul consistently ranks among the top 10 cities in Minnesota for total crime. Yes, that includes both violent and property crime. Now, before you scroll past that, think about this. Crime rates aren't just statistics on a spreadsheet. They influence insurance costs, rental demand, family decisions, and long-term resale value. Even subtle increases in perceived risk can dampen demand from buyers and renters who have plenty of other options in the region. Here's where the real twist comes in. Unlike Minneapolis, which has seen stronger price growth due to urban demand and limited inventory, St. Paul's home price appreciation has lagged behind its big city sibling. More inventory can be good in a balanced market, but in St. Paul, the extra supply has kept prices from gaining momentum, even as other parts of Minnesota edge upward. So while many buyers point to St. Paul as the more affordable alternative, that affordability isn't necessarily because it's a smart investment. It's often because demand is weaker, not stronger. That brings us to migration patterns. Minneapolis and many fast-growing suburbs are pulling people in, but St. Paul's population growth is noticeably slower. People aren't flocking here like they are to exurban communities with booming job markets and perceived safety advantages. Sluggish net migration signals less upward pressure on housing demand, and that's something every investor needs to weigh. Ask yourself this: would you rather buy in a market where prices are rising steadily and people are moving in, or in a place where affordability comes from slower demand and higher crime concerns? In 2026, St. Paul's relative affordability reflects risk more than it does opportunity. So while St. Paul can still be a great place to live, when you look at crime, price trends, and population movement together, the investment picture gets murkier. And that's exactly why it appears on this list of cities to approach with caution. Number 1. Minneapolis, Hennepin County. Minneapolis might be the most talked about housing market in Minnesota, but not always for reasons that make it a smart place to buy in 2026. If you're thinking about putting your hard-earned money into a home here, this section isn't about knocking the city. It's about confronting the real risks the data shows. Let's start with a question most buyers avoid until it's too late. Does Minneapolis still feel safe? Because when you look at the latest public safety data, the answer isn't comforting. Minneapolis is consistently among the highest in the state for both total and violent crime, including a violent crime rate significantly above many suburbs and well above national averages. That matters for more than peace of mind. Crime affects insurance costs, rental vacancy rates, and buyer perception, especially for families or long-term residents. People choose where to live, not just by commute times, but by how safe they feel at night. And Minneapolis's numbers suggest safety concerns aren't going away overnight. Now, what about prices? You might expect a city with limited inventory to be exploding in value, but here's where Minneapolis gets complicated. While Minnesota as a whole has seen modest growth, around 2.9% statewide recently, Minneapolis home price appreciation has been relatively slow compared with other metros around the country. Tight inventory keeps bidding wars alive, but that doesn't automatically mean strong long-term gains. In fact, when demand is concentrated without widespread enthusiasm or population growth, prices can plateau rather than surge. And that brings us to migration patterns. Minnesota is growing overall, but Minneapolis itself has lagged in domestic inflows compared to many suburbs and smaller cities. People aren't moving here in droves the way they are to some exurban markets with newer schools, perceived safety, and more space. When buyers weigh the city against quieter suburbs with stronger job growth and better lifestyle metrics, a surprising number are choosing elsewhere. Here's the controversial part. Minneapolis feels central and vibrant, but that feeling can mask the real economics of buying here. You're often paying a premium, not because the fundamentals support it, but because inventory is tight and the city's reputation pulls buyers in despite the risks. So if you're chasing appreciation or investment upside, ask yourself, is competitive bidding worth it when price growth hasn't kept pace with rising risk factors like crime and slow population gains? For many buyers in 2026, that's a tough sell, and exactly why Minneapolis tops this list. And there you have it. Minnesota's real estate market is full of opportunities. But as we've just walked through in this countdown, not every city offers the kind of risk-to-reward balance that makes buying smart in 2026. From Duluth's scenic waterfront that masks stagnant growth, to Minneapolis with high crime and modest price gains, the patterns are clear. Affordability or convenience alone doesn't equal a safe investment. We've seen how factors like crime rates, population trends, migration patterns, and local economic fundamentals can quietly shape long-term returns, and how overlooking them can turn a dream home into a financial headache. Some cities look great on paper or in lifestyle marketing, but the hard numbers tell a different story. So what's the takeaway for anyone thinking about buying property in Minnesota right now? Do your homework. Look beyond charm and location. Analyze crime, appreciation potential, and the real demographic trends driving demand. These aren't just suggestions. They're the difference between a smart purchase and a costly mistake. If you found this video eye-opening, make sure to like, comment, and subscribe to the Globe Realty. Hit the bell so you never miss our deep dives into the housing markets across the U.S., packed with data, insights, and real-world advice that can protect your money and guide smarter investments. And here's a challenge for you. Think about your own city or neighborhood. Are the fundamentals supporting growth, or is risk hiding behind affordability? Let me know in the comments. I'd love to hear your thoughts. Remember, in real estate, knowledge isn't just power, it's protection. Stay informed, stay strategic, and keep making moves that work for your future.